There's been so much pessimism around that usually something happens when people are this pessimistic, and then we become optimistic for a while. So I would suspect something is going to happen, whether it's peace in Ukraine. That's not a prediction, it's just an example. But if there were peace in Ukraine, or if the central banks got worried and stopped raising interest rates so much, everybody would be optimistic. We would have a big rally. In my view, it would be the last rally. So I guess the theme of 2023 will be the last rally. Well, the last big rally, not the last rally in the history of the world. We'll have many more bull markets in our life.
Investment guru Jim Rogers says that 2023 could be the last big rally. As for silver and gold, he remains bullish on them. On the other hand, he remains skeptical about India's outperformance next year. He predicts a big move in the dollar soon and recommends owning cash rather than investing in the market during a bear market. According to Roger, the U.S. has had the longest period in its history without a big major problem, economic problem. Since 2009, things have been reasonably good in the U.S. That's the longest in its history. That does not mean it cannot go 30 years, but the facts are this is the longest ever. So, it causes one to wonder. Now, I wonder a lot because I see huge debts that have piled up since 2009. I mean, we had a big problem in 2008 because of too much debt. Since 2009, the debt has skyrocketed everywhere. Even China has a lot of debt now, and China had no debt 25 or 30 years ago. But everybody has big debt now, especially us in the United States. He continued with the fact that we've always had bear markets, we've always had recessions. We will always have them despite what the politicians in Washington tell you. And his view is, the next time we have one, it's going to be the worst in his lifetime. 2008 was bad because of debt. Now, the debt is so much higher than the next recession has to be the worst in his lifetime, by simply looking out the window and seeing what's going on in the world. Rogers believes that we are in a period, a dangerous period. Interest rates are going higher, inflation is going higher because they printed staggering amounts of money. Everybody printed staggering amounts of money, America, Japan, everybody printed huge amounts. So, we have this big inflation problem. It's not going to go away without drastic action. And as interest rates go higher, it's going to affect markets around the world that we're going to have a very serious bear market. You should be worried. Jim pointed out that the fact that interest rates were the lowest they'd been in recorded history is a dangerous sign to him. That's not a good sign. They can only go up. They have to go up if they're the lowest they've ever been in the history of the world. And they were artificial. They were absurd, as we're all finding out. I was around in the 70s. Interest rates on Treasury bills went to 21%, and 21% owned Treasury bills in 1980. So, when we have a serious inflation problem, it's hard to deal with, and it takes drastic action, and it hurts. Jim stated. In today's video, Jim gives us his take on the global markets today. We touch on inflation, commodities, central banks, and why he believes the next recession will be the worst in his lifetime.
The American market, I'm using America because it's the largest, has been going up since 2009. That's 14 years. That's the longest in American history anyway. I mean, it could go up 24 years. There's no rule, but we are getting late in the day historically. Interest rates are rising because of inflation. They printed staggering amounts of money. Whenever you print huge amounts of money, you have inflation. Whenever you have inflation, you have higher interest rates, and higher interest rates are usually not good for markets. Most countries have ended the long quarantine periods. Even China, which was the last holdout, is now opening up. So that part of the virus, that part of the epidemic is probably behind us, or soon will be behind us. And that is one reason we're having this rally now. People are starting to go out, spend money, they're feeling better. And that is contributing to the last rally, in my view. But you should watch ET now. They'll tell you what's going on. I hope that everybody continues to have a good time and a good market. But I repeat, it's been going on a long time. It rarely happens in history. I would love for India to continue to boom. I would love for all of us to continue to boom. I'm a little skeptical because it's been going on so long and there's so many new people coming into the market and so many new people who think this is so much fun and so easy. Whenever you hear people talking about how easy it is, you should be worried. Well, sometimes I get it right, but I promise you I make many, many mistakes in my life and in my investing career. Mainly doing nothing right now. I'm mainly watching. I do own commodities, which usually benefit when you have inflation. And I have not been buying stocks. Well, I bought some stocks in Uzbekistan, but that's barely enough to talk about. I am looking for opportunities always, but most markets are still very strong, and I don't like to buy strong markets. I would say agriculture. Agriculture has been a disaster for a long time. Maybe silver. Silver's down 70% from its all-time high, uh, and that's obviously not a bubble if something's down 70% from its all. So I'd say silver or agriculture. I'd have to think a little more, but those are the two that come to mind. Well, as you know, there are lots of real estate markets in the world. The world's a huge world. Some places, New Zealand, Korea, have been having bubbles in property. Parts of India have been having a bubble in property. China was having a bubble in China. A bubble in real estate. So if you find the right places, if you can find farmland in India, for instance, that's probably not a big bubble right now. But most property in many countries has been in a bubble or been overpriced because of very low interest rates. Interest rates have never been this low in history, and that leads to people investing in property. US dollars, as you may remember, I have for a while. It's starting to calm down, but people, whenever there's a problem, turmoil, they invest in a safe haven, and people still think the US dollar is a safe haven. It's not, but people think it is, and so I own a lot of US dollars. Unfortunately, I think we're probably coming closer to the end, maybe the end next year or so, for the US dollar. It's been very, very strong. What I suspect will happen is when the markets get bad in a year or so, whenever they do, the dollar will have one big, big move up, and that will be the last move for the dollar, and I'll have to sell my dollars. I don't know what I will do with my money when I sell my dollars. That's a problem, but if you have any suggestions, please do not announce them on ET now. Please send me an email because I'm looking to do what I will do with my dollars when I sell them. Well, if you have cash during inflation, obviously you're falling behind, but interest rates usually, short-term interest rates usually adjust and go higher, so even your cash will not suffer that badly. But I will tell you again, it's better to own cash and earn very little money than to invest in stocks or something and lose 10% or 15 or 20%. But bear markets can be very, very destructive to people. So if you're in the wrong assets and there's a bear market, you will lose a lot of money and you will wish you were in cash. So yes, I know the arguments against cash, but I also know the arguments for cash unless you have something else to do. If you don't have something else to do, put it in cash.
Nothing goes straight up or straight down. There are ups, and downs. There are corrections along the way. That happens with inflation too. And yes, if the price of oil skyrockets and then calms down for a while, people think inflation's coming down. But they're usually temporary, especially when you have staggering amounts of money printing and it's compounded by war. War makes it more difficult to plant crops or harvest anything when you have war. But the main problem, we had inflation before Ukraine. And unless something is happening dramatically, we're going to continue to have inflation because as the economy slows down worldwide, central banks will print more money. The Japanese are already printing staggering amounts of money, and they have said we will continue to print money. It's the third largest economy in the world. But when you have all these guys printing money, and Washington will, too, if things start slowing down. Jim continued to press on that the Federal Reserve is going to print more money. They're going to loosen up again. They don't care about you and me. They care about their jobs, and that's how they think they'll keep their job. It's not good for us, but they think it's good for them. What do you make of Jim Rogers' view on the market condition? Let us know in the comment section below. Also, ensure to like the video, subscribe, and turn on notifications.